Aloha and welcome to Java. Thank you kindly for joining me. It's September 11th, 2024. It's Wednesday, or better known as CPI Day, because that is what is going to be the major mover, or expected to be so, for the markets today. So, a couple of things I would like to bring up first before going into this. Today is Wednesday, so we will be having a live discussion after Greg's live this afternoon. It's 5 o'clock or after he is finished Eastern Daylight Time, so after stock markets closed. And if there's anything in particular that you would like to discuss, you can either leave it in the comments below or go over to Discord, join with that link, and leave it in the main chat, and we can address that later this afternoon if you have questions or anything of that nature. There's quite a few brilliant people in there uh, with all specialties of cryptocurrency and history, so please feel free to join us there. Would like to bring up another couple of things. Last night was a debate, and it had several effects, one of them being suppressing the price of cryptocurrency. But we'll go into that with the markets. And why do I have this photograph here? This is a historic Russian vessel heading into Morocco. But this would be considered a real asset. So if you are interested in sailing ships or something of the sort, might be something good to look at. So with that, let's get into the markets. Starting with the MMRA, favored risk indicator, is down significantly. Now below the 230 level, this is at 227.7 right now as we speak. This is still in high territory, but barely. What happened was the US 2-year yield falling to its lowest since 2022 ahead of this CPI report stands for the core price inflation. Now, this is normally used by the Fed as the main indicator as to whether they will uh, move rates, either hiking or cutting in the past. So the CPI is to show another muted rise is this story as the Fed debates the rate cut size. Now they've moved more to jobs information if you're new here, but the CPI and inflation reports, if they're way off, can have an effect. So with this, we've got continuation. The market yesterday did bring back a bit. It's on light volume. There's a lot of hesitation. We feel anxiety coming back, and this is basically if we get a weak CPI reading, basically lower inflation, this will boost the market. But if inflation is high, then the market will expect that the Fed will not cut rates, and a high inflation print will, as I say, bring the boots of doom to crush it. So watch for that. You can see the immediate reactions. A lot of times the first major move is wrong, so keep an eye on that. So back with the fear greed meter, we're back in the fear territory, as I'm saying, like hesitation, anxiety, building a bit as the market is beginning to realize the economy is not as strong as they're purporting. So with this, we've got Japanese shares falling on a hawkish bank of Japan because they're talking about hiking their rates. That would strengthen the yen and drop their market. So we can watch these others as examples for what we're going to see for the US stock market in a muted fashion. Okay, so with this, we've got the 10-year yield currently and the relative strength of the dollar, the Dixie, both pulled back a bit, and this is giving breathing room to the stocks basically so they can rise a bit. Now, cryptocurrencies, as I said, under pressure, but Bitcoin still well above that 56,000 level. Now, the drop, if it drops below there, could hit the next level of support that's strong, looks to be 54, but we'll watch this as well for that space. Now, going over to stocks, currently in the green, we've got VIX also, the volatility index or fear index is also rising, as well as some of the safety plays. Now, oil has been beaten down quite a bit. Expect that to have a bump today, the probabilities would say, uh, and before possible continues lower on lower demand unless there is supply destruction. What does that mean? Oil tankers having issues if it gets too low. Okay, moving to futures. Right now they're showing weak. Got a bit of red there, so could be, depending on the CPI print, showing some weakness, basically bringing in that anxiety factor. So stocks right now really becoming troublesome. They're going to be difficult to trade today watching that print. And let's go into the calendar. So when are we going to see this? Well, prior to market opens, core CPI. So from there, we'll watch those initial moves, wait for it to settle after the market opens. Not financial advice, but generally the better things to do for seasoned traders. Just kind of watch it, let it settle, make your plays from there if you don't have them in already. So with this, I've got Thursday morning because those are all pre-market. So if you're doing longer trades, you want to set up for that. We've got initial jobless claims, which now is the larger metric that the Fed is looking at regarding their rate cuts for the United States as it is. Notwithstanding, we've also got the core PPI coming in, and this is also prior to market open in the morning. So you're going to have to be set up for these moves, hedged for them, or out prior to the market open tomorrow. So that's what I want to warn you about. So as I'm saying, CPI, PPI, anticipation. We sit here and wait to see what it's going to bring. But I've got news for you. Rates are lower already. And it was not because the Fed did any cutting yet, at least not formally. They're already moving in the background with quantitative easing, purchasing back their own bonds, and then also with currency manipulation. And I don't mean necessarily the US dollar directly, but with foreign currencies. Now, trade is an overlooked element here. Very few are watching this. And the United States is running a large trade deficit. And as we do, through this mechanism, they can manipulate, if you will, foreign currency value as they have these through the reserve currency amounts. So basically, we're doing reverse quantitative easing, and when we do that, that has relative moves through the US dollar. So you've got to always look at what is going on with the dollar relative strength, and then also behind the scenes. It isn't because the Fed is cutting rates formally yet, but they are making moves in the background. So with this, these are the earnings we're expecting to come out. Not anything major, but just keeping an eye on this. So moving forward, I want to talk about what is really going on with the economy. We've got Elon Musk coming out saying the United States is going bankrupt extremely quickly. Well, you have to be living under a rock if you haven't seen this yet. The debt and deficit for this country has been rising at an increasing rate. It's going parabolic. So this is going to be something very interesting. However, United States does still maintain the reserve currency, and that it is not because it is backed by anything other than military power. It's not gold reserves, it's not resources, it is strictly the power of the United States military. And why is that a concern? We'll talk about that in a moment. So, jumping over to Europe for a moment, we've got the number of German insolvencies, small businesses, rising again. Germany is hurting, so they are basically a new example that we can watch for the United States as an economy weakens and spirals down. This is what happens. So the German parliament approved a rescue of a shipbuilding company. So this is government bailouts, more debt that is shifting from the private sector to the public sector, taxpayers, and going to basically put a weight upon their economy for even longer. We've got Volkswagen is scrapping decades old job guarantees, so they're preparing for layoffs. So more job losses, job cuts globally because this is not just an issue in the United States. We're helping spread it around. We've got a positive note here, and I've been speaking about this. Amazon is going to invest over 10 billion in the UK for data centers, not just in the UK, but this is the sector because basically information and the speed at which it can travel is becoming not just the underlying rails for the new currency, but the new currency itself. We'll talk about that in later episodes. However, data and information will become this new currency on the back of the CBDCs. Okay, so I want to speak a little bit more about what's going on. We've got Samsung Electronics also cutting global job cuts, 30% in some divisions. So, as I said, this is a global thing. This is a last desperate attempt for corporations. So, they've been holding up on hiring. Now we are just beginning the phase of where they're actually firing people. So, I've got another story in our community bank. Now, this isn't exactly new, but they've got more mergers, acquisitions. I've got this here because banks still weak, still under fire, and yesterday I got our first hint of weakness in some of the mega banks. So these smaller banks are about to crumble at a more rapid pace. They're either going to close down completely, be bought, purchased out, or merge. Okay, and we've probably got about 20% as an estimate of the small mid-sized banks that must disappear. So I'd like to speak about this a little bit more. This is the backing for any currency fiat is war military strengths. We've got the United States considering Ukraine missile request as Russia gets help from Iran. That should not be the business of the United States. However, it's kind of basically just for retaliation, but because Russia's getting help from our proxy wars, they're talking about ramping up with Ukraine. It's a very dangerous uh, turning point here. The United States at the same time accusing China of supporting Russia's war. So with this, it is US versus Russia, Iran, and China, all three together. So the West, and this means not just the United States but also Europe, and tied in countries imposing fresh sanctions on Iran for supplying Russia with their weapons. In the meantime, the United States has been funneling weapons to uh, basically the borders of these other countries all along, but that's not spoken about. Now we've got Russia releasing footage. They are now conducting some of their largest strategic, this is naval drills, but they're doing much more than this. Largest drills they've done in decades. So ramping up, more of this happening. Now, this one I think really kind of brings together what the point that I'm really trying to get at. So we've got Lockheed Martin, they are large United States Defense Corporation. They build a lot of the warships, weaponry, and such for the United States. So we've got them teaming up with Tata Advanced Systems to join forces to manufacture military aircraft in India. So if you look a little deeper into this, basically what's going on, the United States, because India has a very weak military, but they're very strong with resources as well as labor, and they are actually producing. So United States making a pull here that you're not they're being quiet about this. You can see this if you're paying attention, but they're not being very much outright about this. And if you watch the stock markets and the way they're tied in, you're going to start seeing more of this, I believe, moving forward. It's going to be a bit of time, but with this, we've got a lot of things to do. This is going to bring us some opportunities, especially when they announce the rate cuts. That might be a sell the news event. When that happens, the dollar will gain some strength. They're basically going to drop the stock market and drop the prices of real assets. When you wait and see where they start finding some buyers, that's where it sets a floor, and that is a signal to buy the dip, not while they're still dropping. So I just want to put that word in because there's quite a bit of ways it could go, and you don't want to guess on that. So with this, I wish you a great trading day, wonderful day in general, and until I see you again, my friends, stay free.